Good morning, MMTs and our network around the world. It's 8/3/2012, 6:05 a.m. Pacific Standard Time on a monthly jobs report. How about that? And how to trade super gaps on the opening bell and how to profit from those. How about that? What a wonderful day, because the day is loaded with opportunity. And it's very important to us that you, as an individual who used to be able to make fair and balanced transactions in the markets, have been totally ran out and beat out because of high frequency trading computing cycle machines that have been in the market for years, and people, just the public, once again, um, get manipulated. That's the word I will use. And the public is people like you and me. And when there is a buy and sell machine that is used by machines instead of humans doing it, someone had to program it in there, though. That's why Knight Capital lost almost all its money. But listen, in the high frequency trading model, MMT, what we look for is the 628.75 closing price. We take a look at the current 636, 637. It's pre-market at 606. There's 24 minutes to the opening bell as of right now. One of the key trade management, market maker management now. Let's use that word, market maker management. So on the high end, when they hit that gap up there, is how they reverse with the 3-minute, a 6-minute, a 9-minute to support. Then they bounce right back up and either test that high frequency. If he crosses the bid and ask in here, it'll be very evident in the SMF platform. Yes, it will. Because mathematically, they can't beat you. Now, in the high frequency trading model execution system, is how do you beat them at their game? Well, I'm going to go over here to this 640 put that closed at $11.70 on this very fine Friday morning. 8/3 weekly expiration. How do I make transactions on a weekly Friday expiration? And why are those Fridays so valuable? Well, we'll show you. And we're going to make a market based on this super gap. Now, one thing about gap open up, MMTs, market makers you are, is that an immediate sell gap called gap open up, sell gap. That means that they start hitting and selling down the bid right away. That's going to be confirmed with that 3-minute top reversal bar, which would be greater in value than the previous green bar, MMT. So whenever trading an opening bell on a super gap, here is about $11 almost, or was. And I've got people who will short this right now, live. This is all live right now. That will short this name up at the high. When they drop it down to support, or they'll come out of it, but you know, you want more than 15,000 share volume. So you got 216,000 share volume over here on this super gap on Apple. Now, MMT, how to take advantage of the 615 put at the wholesale price that expires today. And I'm going to give those live limit orders out. And you will get the bottom end of that market. Get your transaction. When it moves that $1.50 in either the call side or put side, you will ring the cash register and feel good about yourself. Now, on this opening bell gap with Apple, the 8/3/2012 620 put, is we're market makers in every market. But we know how that high frequency trading model computing machine is going to steal the premium from the public and abuse them. And we don't like that. So therefore, what we will do now on this opening bell, and this is all here, it's live, and it is 20 minutes before it. And on that 620 put, which is $8 in the money, is how do I get that entry on a gap open up, pre-market futures gap open up, and how they take that premium all the way out. And it hits that bottom area when the stock equity price hits that upper price channel resistance with an immediate reversal as that MMT is making that transaction. You have taken out all of the dollar cost capital risk with that wholesale entry in this 620 put. And I shall give this bid now based on this stock running up in the opening bell. If they don't short it, we'll see if they can run it up and get up there toward that 617.5, and we will have bids right now because the best market on that 620 put, how to trade, weekly, Friday expiration, super gap open up, monthly jobs report, and how do I walk away making some serious coin. That's what this is about right now. All that other stuff doesn't matter. Put bids out here right now. We're going to mark them down $9, start them at $3.60 right here. That's that lower tier. Have alarms set on that opening bell. Anything that falls below 7.5, of course, you're going to get notified right away. And you'll have another alarm at 5.7 below the market. And this is done here and now. And the pricing is the SMF market maker pricing model. So therefore, all of the bigger, higher volume option traders are welcome here. And we have a seat for you, and we also have money for you called capital at its finest to be used in the orderly execution based on super gaps. That's that lower end of the market. Now, let's get over here to that 615 put. Because it is a Friday expiration, I'm going to go ahead and bid this out at 80 cents and $1.20 right now. Why? It's still not in the money, but if they shoot that price up there and they walk away and then they start to drop bids and we continue to run the equity higher, then Case A trade market maker management, Case A, market maker management, entry exit management, goes into full force at that immediate appropriate transaction. And what does that mean? The wall of resistance, but the lower end of the market is on a Friday. They expired today. They're called weekly contracts. So we're going to keep our bids down there below that market. It's going to be a nice day. And we've got that super employment monthly jobs data propelling these nice gaps called volatility price gaps in pre-market. So we're going to deal with this side of the market, okay? And remember, it's 6:13 a.m. Pacific Standard Time. So for you new people that are viewing the video, if you're going to get involved, this is what your morning schedule on a monthly level is going to be like. So every single day you'll be in here. Now, let's get over here to this super gap. All right, we got a 637 by 638. This 640 put, I'm loving this all day long. Once again, this one, well, it paid money, sure did. And not only that, is on a weekly expiration Friday with the super gap, is how do I get this wonderful wholesale entry at the lowest dollar cost price? Remember, the last print was $11.70 now. All right, MMT, I want you to put this contract out at $2.70 on the lower end. I want you to set alarms. Anything that falls below $6.7, set your alarm now. Okay, you got 16 minutes to the opening bell, and this is live. And this is here, and this is a big $10 gap. So we're going to take a look over here at the 635, and I can tell you if we break back up toward that 642 handle, MMT in Case A, is it going to be a sell gap? Generally, when they start getting $10 long, they become sell gaps at the first pass. They pull back 369. They pop back up to resistance. Then you're looking for, is there an elevation at the higher consolidation in that price area, because if there is, then it's going to set up to break higher resistance levels in case a market maker management using the gap opening bell to get the best wholesale dollar cost risk capital entry. That's the important thing, is how am I wholesale? Well, I'll tell you what, you put that down there and on the 635, you mark this thing right here, right now, on a Friday, opening bell gap, is let's see the kind of premium that they abuse the public and how much they steal out of these option prints. They closed at 690. Let us not forget. Now, we have to break up above that 640 handle, but we're going to bid these right here at 80 pennies right now on that 635. That's that lower end of that market. It's a Friday. They expire. We'll trade them right down to the wire. People that don't understand how to be a market maker in options, that's what you want to be. Your day trading model option stuff, sorry, that's outdated. Don't go that way. Because if you do, you're going to get marked to market by these people that are called market makers in these prices. Now, we're going to keep these lower levels based on case a market maker management going up above that 640 to that 642 handle, then these will hit their all-time lows at that very low dollar. Remember, yesterday's range was 940 up to 1580 from the other day's close. That was not last night. They closed at 1170, but prior to that, they closed at 940 with that low of $5. That was a $10 move, $10.80 in that option. You get 30 contracts and you're pulling out, you pull out $6 or $7 on something like 30 contracts at wholesale price. They're like $20,000 trades. Yeah. So once again, let's define that lowest dollar cost capital risk entry in your market maker management case A, breaking above there and taking these premiums away from the public. And then we want to help the public so that they don't become victim in these options on how they move up from one day and down the other. They're called calls and puts and things like that. Just stay tuned at SMF. You'll learn a lot more about the high frequency trading model. There'll be lots of other names. One of the ones that's due is CMG. It's a Friday expiration. It didn't do it last Friday. They got marked down on the earnings. We were short this name, but I'll tell you what, it's starting to get back into its gap. And you look at that pullback and you go to that $285 call on Chipotle, which would be right here on a Friday expiration. Here, I'll bring it up. Okay. CMG, $285 call, expires today. I'm going to put it right here. These can make a lot of money today, and I'm featuring this 12 minutes before the opening bell in pre-market. Gap open up, super gap open up, and how to trade it, how to make good of it. So what I will tell my MMTs, based on the gap open up sequence on the CMG, and it did not perform last week, this could be a sleeper and a big mover. So once again, I'm going to tell people, let's have some limit orders. It's gapping up $5, $6. It's already doing that. These are going to gap up in value, but I'm going to give you a limit order. The last print was 205. It's a premium. Start taking small orders, a couple contracts. We'll start scaling this one because, and we'll have to pay a premium on one. And yesterday's high was 370. So put it out there at $2.20 and start squaring in there, and then keep a limit order out no matter what in the trade management. In the trade management gap open up structure, you will still keep limit order out at $1.50. But you will buy up above the market based on the support and resistance. It is due for a breakout. Yes, we shorted it all the way down to the bottom, but now it's time to take those long trades off that bottom. And we're going to see if it can break up on out of here on 2,600 shares today. That's all you have in pre-market. So I'm going to conclude some of the trade managements and highlights. And I'm going to be all over that CMG. And I'm still watching that $2,500 put, and I'm going to bid these today. They close at 659 in MMTs. It's an 818. I'm going to bid this today at 80 pennies right here on that $2,500 put before the opening bell in 10 minutes. I'm bidding here. I am bidding here live before the opening bell at 80 pennies on the $2,500 put. Why? Because with that super gap, we're going to see how much premium that they're going to take away from the public, or the bigger traders who use puts and calls to hedge risk in the professional community, such as, regular traders, I guess you would call it. This is market making. We're the only market maker school out here, and we'll prove it with our entries before the market. And you're welcome to be here live with us. We would like to show you a little bit about high frequency trading models and how to beat them and how to put them in your favor with that entry and exit in the price volatility. That's exactly what we're going to do. Friday expiration, opening bell, this very setup and these very gaps that are climbing higher in Apple and higher right here. So you got that $10 right here. That means all that premium's coming out now. That means that on that opening bell, the market will be totally mathematically imbalanced. You'll make the transaction, it'll balance itself, you'll get out with your profit, and that will be that. Thank you, MMT Market Maker.